Did you know some drivers save over $1,000 a year by using hidden quirks in their policies? I'm Natrenand, and after a decade in car insurance, I'm here to reveal 5 legal insider loopholes to slash your costs. So buckle up, let's dive into these money-saving secrets. Our first loophole tackles the dreaded new driver surcharge. Insurance companies hit new drivers with sky-high premiums, but there's a workaround: fronting. This means listing a more experienced driver, like a parent, as the primary insured on your policy. Since premiums are based on the primary driver's record, your rates can drop significantly. But here's the catch: you must be honest. Hiding that you're the main driver is fraud. Instead, talk to your agent about legitimate multi-driver discounts. The system often penalizes young drivers, so use every ethical advantage you can. Fronting isn't perfect, but it's a way to navigate unfair pricing. Always advocate for fairer models, but until then, use the rules to your benefit. Remember, transparency is key. Never risk your coverage for a discount. Loophole number 2, parental policy placement. Register the vehicle in your parent's name and list yourself as an additional driver. This can help young drivers avoid hefty surcharges and save hundreds annually. It's legal if your parent is the primary driver on paper and you're listed as a secondary. But be upfront with your insurer about who drives the car most. If there's an accident, claims go under your parent's name, which could affect their rates. Weigh the pros and cons and have an honest conversation with your parents before deciding. Know the risks, and make sure everyone's comfortable with the arrangement. Loophole 3, the voluntary excess gamble. Raise your voluntary excess, deductible, to lower your premiums, sometimes by 10 to 20%. You're betting on your safe driving, but make sure you can afford the higher excess if needed. Shop around for quotes with different excess levels. Calculate how many years of savings it would take to offset a potential claim. If the math works for you, this can be a smart way to cut costs. Just don't overextend. Find your personal risk-reward sweet spot. Loophole 4, midterm cancellation refunds. You don't have to wait for your policy to expire to switch providers. Cancel midterm and get a pro-rata refund for unused months. Start shopping for better rates 6 to 8 weeks before renewal. If you find a better deal, cancel, grab your refund, and enroll in the new policy. Always compare coverage levels to avoid being underinsured. Insurance companies won't advertise this, but it's your right as a consumer. Be proactive and use timing to your advantage. Loophole 5, fight back against price mapping. Some insurers charge higher premiums based on zip code, often unfairly. Check if neighboring zip codes offer lower rates for the same coverage. If so, consider updating your address or negotiating with your insurer. If you spot discriminatory pricing, report it to your state insurance commission. This isn't just about saving money, it's about demanding fairness. Stay informed and help hold insurers accountable. Together, we can push for a more equitable insurance system. There you have it. 5 insider loopholes to save big on car insurance. Be transparent, assess your risk, and always compare coverage. Stay informed and advocate for fair pricing. If you learned something new, hit like, subscribe, and share your own tips below. Until next time, drive safe and keep your cash where it belongs, in your wallet.